Hey everyone, welcome back to Corporate Decoder. Today AMG Funds I just filed their semi-annual shareholder report for the 30th of April 2026, and I am seeing a lot of interesting numbers in these audited financials. Quick note, this is not financial advice, just my take on public filings for educational purposes. This report shows us a detailed look at several funds managed by A.M.G. and gives us solid insight into what type of investments they hold and how they are performing. First off, this filing is for AMG Funds I, which includes several different funds. We are going to focus on the financial tables for a few of these to see what is really going on under the hood. They are showing us the financial statements as of the 30th of April 2026. Covering the reporting period from the 1st of November 2025 to the 30th of April 2026. This is essentially a half-year update. One of the most important parts of these filings are the financial statements themselves. They give us a clear picture of the company's assets, liabilities, and equity, what they own, what they owe, and the value of the stake shareholders have. For example, the AMG Funds I Core Bond E.S.G fund shows investments at value totaling over $103 million with a cost of over $110 million. This means they bought their investments for more than their current value, which is not ideal but common in bond funds when interest rates fluctuate. On the other hand, the AMG Funds I Small Cap Growth Fund has investments valued at over $207 million with a cost of over $196 million. This indicates their stock picks have grown in value, which is a good sign. Looking at the statement of assets and liabilities for the AMG Funds I Core Bond E.S.G fund, we see investments at value of over $103 million. Their total assets are over $105 million. On the liability side, we see payable upon return of securities loaned at over $1.9 million. This is a significant figure for a bond fund. The net assets for this fund are just over $102 million. Now let's drill down into the schedule of portfolio investments for the AMG Funds I Core Bond E.S.G fund. This table shows us exactly what they are holding. As expected for a bond fund, a large portion is in corporate bonds and notes making up over 45% of their holdings. They also have significant investments in US government and agency obligations at around 40%. Within the corporate bonds section, we see exposure to various sectors like financials, industrials, and technology. For instance, they hold over $17.5 million in financial corporate bonds. This diversification is good, but also means they are exposed to risks across many different industries. They also hold over $5.5 million in mortgage-backed securities, which can be sensitive to interest rate changes. Switching gears to the AMG Funds I Small Cap Growth Fund, we see a very different picture. As expected for a growth fund, their investments are heavily weighted in common stocks at nearly 99% of their holdings. The healthcare sector is a major focus here, accounting for almost 25% of the portfolio. This means they are betting heavily on the long-term growth of healthcare companies. They also have substantial holdings in industrials at 28% and information technology at over 20%. These are sectors that are generally expected to grow rapidly. Specifically for the AMG Funds I Small Cap Growth Fund, they list stocks like Grand Canyon Education, incorporated with a value of over $5 million, and SPX Technologies, incorporated at over $6 million. These are significant positions for a fund of their size. Their top 10 holdings combined make up a large portion of the fund, indicating a degree of concentration risk. The AMG Funds I Smaller Mid Cap Growth Fund also shows a heavy concentration in common stocks at 99.2%. Their industrial sector exposure is significant at 28.4% and information technology at 23.1%. This fund also has a substantial portion in healthcare at over 21%. This suggests a strategy focused on companies with high growth potential across these key sectors. Now let's look at the statement of operations for these funds. This tells us about their income and expenses over the 6-month period. The AMG Funds I Core Bond E.S.G fund reported net investment income of over $2 million. However, the Small Cap Growth Fund reported a net investment loss of over $336,000. This makes sense as growth stocks, particularly smaller ones, may not be paying out dividends, and their value comes from potential future earnings rather than current income. The financial highlights section is crucial for understanding performance on a per S-share basis. For the AMG Funds I Core Bond E.S.G Fund Class N, we see a net asset value of $9.01 at the end of the period. The total return for this 6-month period was just 0.09%. This is quite low when compared to the Small Cap Growth Fund, which had a total return of 8.52% for the same period. This illustrates the difference in risk and potential reward between a bond fund and a growth stock fund. For the AMG GW Swank Small Cap Growth Fund Class N, we see a net asset value of $10.84 at the end of the period. Their total return for the 6 months was 8.52%, which is respectable. The ratio of net expenses to average net assets for this fund is 0.88%. This means for every $100 invested, about 88 cents go towards expenses. This is a critical number for investors to consider, as high fees can erode returns over time. The portfolio turnover rate for this fund was 116%. This means they bought and sold a lot of their holdings within the year, which can incur higher transaction costs and potentially more taxes for investors. Moving on to the AMG River Road Large Cap Value Select Fund, we see a different investment strategy. Their common stocks are valued at over $42 million. The top holdings show a strong preference for financials, making up over 29% of their portfolio. Companies like American Express Company and Wells Fargo and Company are prominent. This indicates a strategy that seeks value in established financial institutions. The AMG River Road Mid-Cap Value Fund has a very different portfolio. Their common stocks are valued at over $375 million. Communication Services makes up a significant portion at 7.2%, with Atlanta Braves holdings. Class C being a notable holding. Consumer Staples is another large sector at 17.9%, and financials are at 16.1%. This fund seems to be looking for value across a broader range of sectors and company sizes. Scroll notes to financial statements unaudited the 30th of April, 2026 IMEP. The notes to financial statements are where you find the nitty-gritty details. For example, Note 1 covers the organization and summary of significant accounting policies. This is where they explain how they value their investments, particularly the use of Level 1, Level 2, and Level 3 inputs for fair value measurements. Level 1 uses quoted prices in active markets. Level 2 uses other observable inputs, and Level 3 uses significant unobservable inputs. The AMG GW K Core Bond E.S.G fund shows all its investments in securities are classified under Level 2, which means they are valued using market-based data, but not necessarily directly quoted prices. Looking at the financial highlights for Class Z of the AMG GW K Core Bond E.S.G fund, we see a net asset value of $9.01 at the end of the period. The total return was 0.28%. The ratio of net expenses to average net assets was 0.48%. This is considerably lower than the Class N share, which had 0.88% expenses. This highlights how different share classes can have different cost structures. In the notes section, we also find details about risks. For the AMG Veritas China Fund, for instance, they detail risks associated with emerging markets, political risk, and specifically PRC tax risks. This is crucial context for understanding why these types of investments might be more volatile. They also mention variable interest entity risk, which is a common concern for funds investing in China. Finally, let's look at the AMG Veritas China Fund. Their common stocks are valued at over $43 million. Information technology is their largest sector, holding at 32.5%. Top holdings are dominated by Chinese companies like Tencent Holdings Limited and Taiwan Semiconductor Manufacturing Company Limited. This fund is clearly focused on the Asian technology market. A significant portion of their investments, over $6 million, are out on loan, which is a common practice to generate extra income. Overall, this filing gives us a good snapshot into the diverse strategies employed by AMG funds. We see a clear difference between the conservative bond fund, the aggressive small cap growth funds, and the regionally focused China fund. The financials reveal how each fund is performing and what risks investors should be aware of. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.